you're asking, how can I apply relevant costing technique in those decisions? And the first one that I want to look at is make or buy. Should we produce the raw materials ourselves, or should we buy it? If I'm going to make it, then that means I'm ready to go through the processing and everything in-house. And what will be my relevant costing? I need to know it. If I'm going to buy it, likewise, it means I'm going to pay someone to do it for me. So, which means instead of running the machine in-house, instead of getting staff in-house, I'm just going to outsource it. Simple. That's what we're saying. So when we are buying, what we are practically saying is that we are outsourcing. And when we are making it, it means we are doing it in-house. And if I ask you, what would be your relevant costing in each of these scenarios? What should be our relevant costing? If you are doing in-house or if you are doing outsourcing? In-house first. Let's do in-house first. You want to produce the raw materials in-house. What would be your relevant costing? What kind of cost would be relevant to you?
Materials and your labor.
Fantastic. Your variable cost. In fact, beyond variable cost, some fixed cost can also become relevant. Yeah. Remember when we spoke about specific fixed cost, step up fixed cost, they can become relevant. So in that case, I'll just say marginal cost. And you remember your marginal costing. You're just saying, what are the extra costs that I'm going to incur because I want to do this? So if I'm going to buy material, I'm going to buy labor, I'm going to buy fixed cost, all of that is my marginal cost. Everything, every extra cost that I'm going to incur because I want to produce that item in-house is my relevant cost. And if I'm going to outsource it, what will be my relevant cost?
The purchase price.
The purchase price. If you want to outsource it, you need to be thinking the redundancy on the people that you already have, that you have to lay off because you don't need them again. Likewise, the machine that you're not going to be using, will you be able to sell it, or will you even incur cost to dismantle the machine? It depends on how your question is framed. And that is why I'm always screaming on understanding. And I'm happy you picked it. Awesome. Redundancy, you need to consider it because you might need to pay them off. If the question says you don't have to pay them off, fine. But the question might say you have to pay them off. So in that case, there might be a situation where you need to consider redundancy. You might need to consider dismantling cost. Or you might even get some scrap value from the machine. In that case, that would be a deduction for you. So all that, and that's why you need to have understanding. So when you are saying those items, it's just common sense. Basic, honestly. Don't overthink it. Don't stress too much about it. Just weigh it. If you are sitting in that situation, what are the things that will be happening as a result of this decision? As a result of this decision. Once we take these decisions, what are the cash flows that must take place? Every cash flow that takes place after that decision will be relevant. Pay off the labor, dismantle the machine, sell the machine, that will be deduction because that will be savings for you. Plus the item that you are buying. All of that. And now you need to know how to take the decision. These are the considerations you make. So for you to say you do in-house or you do outsourcing, how do you decide? So decision. Assuming that you want to do all of this and you decided, you calculated all your costs, if you decide to produce in-house, it will cost you $50. If you decide to buy with all the costs attributed to that, it will be $45. What will be your decision? Produce in-house or outsource?
Outsource.
Fantastic. So which means your decision is the lower relevant value, relevant cost. That's a choice. So if the outsourcing cost is more than the in-house, then you go for in-house. But if the outsourcing is less than the in-house cost, you go for outsourcing. So you just go for the lower one. So the scenario you will see is, in fact, let me just give you an example. Let's say we have this. We have product A and we have product B. Yeah. So material cost, labor cost, and let's say you have fixed overhead. Everything in dollars, right? What's the total cost? 3, 6, 11, that's 20, 24, 34. So that's the total cost. So you have that total cost. Then let's say you can sell these items for $14. No, let me say $18. Oops. You can sell this for $18. You can sell this for $25. So tell me. No, sorry. Purchase price, not selling price. So which means if you want to outsource, this is purchase price. So watch it. This is purchase price if you're outsourcing it. And if you are producing in-house, these are the relevant costs. For A and B, tell me, should we outsource or should we produce in-house? Which one should we produce? Which one should we buy? Which one should we make? Which one should we buy?
So is the fixed cost specific?
It's not specific. Thank you for that question. Excellent. Because that's the next thing I was going to do. When you answer this one, then I was planning to tell you that, okay, now, if the fixed cost was specific, well, so we'll do both. So for now, the fixed cost is general. Everyone should go for this. Everyone should go for this.
So for that one, we're not taking into account the other costs in purchasing, just the purchasing price?
Remember the decision you're trying to make. Should you buy or should you make? If you want to make it, this is your cost. If you want to buy it, this is your cost. This is your buy, this is your make. So should you buy, which means should you buy it at 18 instead of spending this money? And should you buy it at 25 instead of spending this money on B? That's your make or buy decision. Should I make it? If I'm making it, this is what I'm going to spend. If I'm buying it, this is what I'm going to spend. Should I make A or make B? Which one? So let's start with A. Should we make A or buy A?
We should make A.
Okay. If you're going to make it, your cost of making it will be your material cost of $3 and your labor cost of $11. So your total cost is $14 to make it. So, but if you want to buy it instead of making it, you can buy it for how much? $18. So which one will give you more profit? Where do you think you'll be able to get more profit? Assuming that this product is sold for $20 in the market. If you work on it and you want to sell it, which one will give you, where do you make more profit? Is it from making it or from buying it? From buying your raw materials or from making it? Making it. So let's look at B. For B, should we make it or buy it?
Buy
Kesha.
it.
No, Kesha, tell me.
Buy it.
Why?
Because the making price is 28 per cost, and the buying is 25.
Exactly. Fantastic. So B definitely we're going to buy it. Because it's cheaper for us to buy it. 25 against 28. because those are the relevant costs. You see where the application of relevant cost is coming in. So let me now tweak it a bit. Let's say fixed cost, the specific fixed cost, which means a step-up fixed cost is relevant, is as a result of decision of producing A and B. So if you want to produce A, you are going to incur additional $6. If you want to produce B, you're going to incur additional $6. Will our decision change? Carissa, for A,
Yes, sir.
will the decision change?
Yes, sir, because for A, now you would buy instead of making.
Fantastic. And for B, Daniel?
For B, you would buy as well.
Why will you buy?
It's cheaper to buy.
It's cheaper. Because instead of spending $34, $25 is available for us. Why should we spend so much money? It's as simple as that. The second decision, so that's number one. I want to look at about 3 decisions for application. The second one I want to look at is the shutdown decision. This one, we've spoken about it before. I think when we're doing the introductory part where I was talking about absorption costing, traditional accounting, and all of that, shutdown decision. And what you're asking, the question you're asking is, should we shut down? So we already have a business. The question is, should we shut it down? So should we shut down a part of our business? Should we shut down a part of our business? And when you want to consider, should you shut down a part of your business? Usually, what do you consider? So you have to consider revenue coming from, fantastic. So revenue that you're going to lose, because if you shut down that business, there'll be a revenue loss because you have shut down that part of your business. So that's very important. What else do you have to consider? Bringing everything together, variable cost, fixed cost, let me just help you. The cost you're going to look at is the cost to avoid. You're trying to avoid a cost. That's why you want to shut down. Which is your avoidable cost to avoid. So those are the 2 types of information you need. You need to know, what am I going to lose and what cost am I trying to avoid? Remember, the cost you're trying to avoid is like your savings. You're saying that if I shut down this business, I will be able to avoid all this cost. I will be able to save all this cost. If you're going to make more savings from what you are losing, just shut it down. So decision criteria is shut down when the revenue loss is less than the avoidable cost. So let's look at one example. Let's warm it up. Let's say you have sales of $40. You have variable cost, fixed cost, $30, $20. So which means our profit is, how much is our profit? Is a loss, -10. Okay, so scenario 1, fixed cost is general. Should we shut down?
No.
No?
No.
Okay, no?
Avoidable cost.
Good. So if we shut this guy down, we're going to be losing contribution. That is as simple as that. And that's why in a shutdown decision making, contribution is key. The only reason why you don't talk so much of contribution is that there might be step-up fixed cost or specific fixed cost. And if those specific fixed costs come in, then you will not be able to use contribution. And that's why I don't teach it with contribution. But it's easy if you have a general fixed cost It's going to be exactly contribution. Yeah. So don't shut down. But now scenario 2, fixed cost is specific. Now, should we shut down?
Shut it
Yes.
down.
Shut it down. So we're going to shut it down because obviously $20 will become relevant. Then we'll be avoiding $50 and we'll be losing $40. So we're making savings, more savings than we're losing. So in that case, it makes sense to shut it down. The last one is further processing decision. Further processing. And pay attention to this. I'm looking for the best example to, okay, let me use, I'll use oil and gas to explain this. I think it's probably the closest thing you can get. Yeah. So usually when, fields are explored, I mean, oil fields, you go to oil fields, then you do exploration. So when you do exploration, you can have so many products. You can have crude oil, for example. You can also have dirty gas coming from the field. Yeah. Field exploration. Yeah, this is going to the reserve. Yeah, to really do the exploration and all of that. This crude oil, you can now refine it. You can decide to process further. Yeah, refining. They call it refining process. That can give you gas that you use to fuel your car. Yeah, that's your car fuel. You can have what some people call kerosene. You can have even diesel. You can have even some lubrication. You have different types of oils and all of that, lubricants and all of that. Some brake oils and all. Different types of products. This same dirty gas as well, you can decide to process it into LNG, which you mostly use to cook. Your power source actually is in Canada is coming from LNG. You can process LPG. If you see a burner that you see flame, what they are using is LPG, right? You can have other ones as well, propane, butane, and all of that, different types of products. So you can see the chain of production. Before, it was just exploration that gave this, then further refinery gave this. So when you're talking about further processing decision, what you're asking yourself is, after doing exploration, I already have crude oil, I already have dirty gas. Should I sell at this point? Or should I process further to these different products? That is what further processing is talking about. Should I sell at the point of separation, or I should refine further, or I should process further? That's what we're saying. That is the question you are asking yourself. Because sometimes it might just make sense for you to sell at the first stage. Don't process further, especially if you're going to incur more cost than the additional profit, additional revenue you are going to make. Why do you want to process further? But if you foresee more revenue than the extra cost of processing further, then it makes sense to process further because you are in the business to make money. So whatever makes you more money is the decision you want to take. So what I would say is your decision is process further if the extra revenue is more than additional processing cost. I move from point A to point B, and I can sell product B, I can sell it for $5, right? But if I decide to process B further to be C, I can sell C for $7. However, for me to process B to become C, I need to incur $3. Should I process B further? Or I should sell B? Should I sell C or B?
Sell B.
Sell B? Yeah, because you are incurring additional $3. However, you're only going to make extra $2. Because if you process B to become C, you're only going to sell C for $7. And that's just additional $2, but you have incurred additional $3. So that's a loss, -1. So it's better you just stop at B and sell at B. Let someone else go and process B. Whoever knows how to process it cheaper or who can sell it more expensive. Yeah, so you have product EFGH. We want to know, should we further process E or F or G or H? Which of them should we advance further, or which of them should we sell as it is? Look at the information you have. You have selling price at the split off. The selling price at the split off means that as you have E now, it can be sold for $12. F can be sold for $16. However, if you decide to process further, you can sell E for $20, F for $23, and like that for G and H. Now, for the cost information, currently you are incurring $8 on all of them to get E, F, G, H. However, if you decide to process further, you will incur additional $5 on each of them. In addition, there are specific costs, specific fixed costs that is tied to each of these products, different amounts. And you have the total budgeted units that you can produce. The first thing we need to think about is what's the extra revenue for further processing? And for E, how much is the extra revenue we are making on E? We are making extra 8. For F, 7. For G, 10. And for H, 4. That is the extra revenue we are making. Then the next question is the extra cost as a result of further processing. $5 for all of them. Your net situation for each of these is 3 for this guy, 2 for this guy, 5 for this guy, and -1 for this guy. So even before you consider your specific fixed cost, which you have to consider for sure, because it's relevant to answer your question, Usman, because it's specific. Yeah, so it's going to be additional cost, but you can already see that there's a product that is already out that we shouldn't bother to further process. And what is that product? H.
H.
So this is already out because we're already spending more than we are making, the extra that we are making. So we are not going to do this. Doesn't make sense. Right? However, we'll look at the specific fixed cost. And what is specific fixed cost per unit for EFGH as well? So for E, how much? How much do you have? 0.5. For F?
4. 0.6.
I'm not calculating, so I'm relying on what you're telling me. Then H, there's no point even furthering it because we already said at the earlier stage is already out. So so these are additional costs. So what's the net situation? 2.5, right? -2 and 4.4. So what's our final decision? Which one should we process further? Which product should we process further amongst the remaining 3?
G.
E and G.
E and G.
E.
Thank you. Because they are the only ones in positive. So those are the only products where we stand to make extra money than the extra cost to further process. And that's how you make the decision. It's as simple as that.